Turn our attention to the local market. The market closed more than 2/3% in the green. Banks, miners leading the pack. David Shapiro from Sasfin Securities joins us for more on the markets. David, first of all, we are safely, dare I say, safely below 16 Rand to the US dollar. On a day we had record unemployment figures, the market is more than 2/3% up. How do you make sense of that?
Well, no one can make sense of currency markets. You want to lose your reputation, try forecast where a currency is going to trade. But I think it's also a reaction to the very weak movements that we saw on Friday, where I think there was an expectation that the country was going to come under severe pressure, that we'd see more lockdowns, which didn't happen, and that would weaken the economy. So I think this is just rolling back on perhaps some of the more severe forecasts that were made on Friday. So I would expect that as things stabilize, and I believe they will, that the Rand will start to claw back some of the losses that it's made over the last few days and perhaps head back maybe to the 15.5, 15.80 area in the meantime. The dollar still remains quite strong.
I'm wondering whether or not you had a chat or two with your clients, your investors, on those dreadful figures coming out of Statistics South Africa. We've got a record high employment rate. Surely, when they invest, these are some of the variables they look at.
Well, Devin, where it concerns me, and you saw First Rand's results out today, Standard Bank yesterday, or trading updates. Until we see an economy that's on the move, we're not going to see anything dramatic coming out of those banks. They're very well run. I've got absolutely no issues with management or the efficiencies of these banks, simply the underlying economy. Until such time as we get into a position, and you heard it from Iraj, you heard what he said, until we get to a position where we're building factories, sinking mine shafts, doing things of that nature, we're not going to see growth or any kind of movement in the unemployment rate. Remember, as long as we have high unemployment, it means whatever money or revenue government gets goes to social grants, goes to making sure that those unemployed people eat, that we educate them, that we hospitalize them, and so on. And that's a big drag on the fiscus. It doesn't leave much for investment. So I think, we've got to, and I'm echoing what Iraj said, that you've got to have changes in policy here that make people want to invest, and we just make it a lot easier to expand this economy.
I wonder if there's any silver lining in what Vukile fund managers had to say today. They're restoring a dividend. Now, these are the guys that own plenty of rural shopping centres, and I'm wondering if what they said about foot traffic increasing in those areas is anything to smile about.
Well, it is, in the sense that people feel safe about going to those shopping centres rather than heading off to Sandton City or Eastgate or and any of the other big malls, simply because of your overcrowding. You want to avoid crowds. So this is where you go to your rural mall, go into the supermarket and get out as fast as possible. So I think they're pretty well placed, a very well run property company as well. Generally, once more, I have to say that we've got super managers of property companies. What's happened is that the economy hasn't helped them at all. Not really their fault.
David Shapiro from Sasfin, thanks very much indeed for your insights there. All right.